Hello and welcome. As the US China trade tensions flare once again, we speak to senior economist Jayant Krishna, Mitali Nikore, as well as market expert and founder of Equinomics Research, Chokkalingam, on what do the US China trade tensions mean for India and for the rest of the world. Thank you all for your time. Mitali, first to you. What does this flare up really mean for India and for the rest of the world? Trump's latest statement on 100% tariffs, China then saying that, look, they will retaliate. So, what does this really mean for all those watching the tariff momentum, really, and the tariff tensions for very, very long now?
Thanks, Sakshi, for of course having me on the show. And I think let's just take a step back to understand how did we get here. So let's circle back maybe to April, and that's really where this entire conversation around tariffs took the mainstream. Of course, President Trump had been speaking about tariffs and imposing tariffs as a very important means of collecting revenue for the US government since his campaign. And this has been a long standing sort of a narrative that he has been speaking about. I know a lot of people have been saying, oh, it's just come into the forefront, but actually he's been speaking about this throughout his campaign. And China has always been one of those countries that he has named multiple times throughout his campaign to say the US needs to sort of compete with China, the US needs to get ahead of China, the US needs to ensure that China is trading on fair terms. These are accusations that he's made even throughout his presidential campaign. So, when he came into power and announced his tariffs for the first time, China was really on his radar. And he had sort of said that, China is going to be the one country I'm going to put the maximum tariffs on. And they, in fact, exceeded almost 200% in April. Then, following some negotiations, they had a pause period, first a 90-day pause, then a few months more of pause, and they brought the tariffs down to the base level of 10%. Everyone, of course, as analysts have said, and I also feel, that is because of the dependence of the US economy on Chinese imports. China is their largest trading partner. And at the end of the day, when you go and you impose tariffs of 200% on your largest trading partner, you can't replace those products overnight. You can't re engineer supply chains overnight. Now it's been 6 months. So, in the last 6 months, he's gone ahead and done trade deals with a number of countries, especially the UK and a little bit in Europe, somewhere in Japan and South Korea. Also, some thawing has happened. And he now feels probably that, and this is again my opinion, he probably feels, okay, now I found enough replacements to, these Chinese products, and I can again go ahead and put these tariffs on China, particularly taking into account that China in these last few months has not budged their stand on rare earth mineral value chains and allowing the US to enter those value chains in any meaningful way, particularly as investors. So, therefore, this is sort of a reaction to say, here you go, I'm putting these tariffs in. We're back to square one where we were 6 months ago. And I think that's the thought process. But how this will impact the economy, how this will impact India, these are of course to be seen, but it will have an impact. To say that it doesn't impact India, it's something we can't say anymore, because now we're in a multipolar world. We are engaging with China bilaterally. We are also bearing the brunt of the 50% tariff that's been imposed on us. How does this all play out in the coming months and weeks? We have to watch this very closely.
Right, Jan Krishna, do you agree? Should investors then brace for more turmoil going forward? How will all of this really impact India and the rest of the world as US China trade tensions seem to flare up once again?
So, Sakshi, I think I agree with Mitali. The supply chains are integrated all over the world, and any impact between two countries is bound to have repercussions elsewhere also, right? We have seen that when President Trump talked about this possibility of 100% tariff against China. The at the same time the Wall Street crashed. S&P 500 went down. In China, the Shenzhen component index also went down, right? So let's understand, how where it emanates from. The total trade, bilateral trade of both goods and services put together that happens between China and US is of the order of about $660 billion, right? If services are taken aside, then the goods trade between the bilateral trade between the two countries is about $580 billion, right? And US faces a huge trade deficit against it in favor of China, which value is almost close to about $300 billion. So this is the trade surplus in favor of China and deficit, that US faces vis-a-vis China. So it all emanated from there, and then of course, the Chinese are also no less. They know. I mean, almost 70% of the rare earths are found in China, and 90% of the processing capacity all over the world is actually owned by China. And these rare earths, let's understand where are they used. In military, they're used in radars, in jet engines, in solar panels, for consumers, in all products like what you and I use, laptops, phones, electric vehicles. Everywhere these rare earths are used, and China did impose some restrictions on export of rare earths to any country, not just the US, right? And what they say, they did it in their own in the interest of their national security and so on and so forth, right? So this was a retaliation by President Trump to impose, I mean, they've not imposed, but the threat of imposing 100% duty, and China says, it's both ways. I mean, if you look at US has imposed a greater duty on Chinese ships, which bring Chinese not duties, higher levy charges, on Chinese ships that bring Chinese stuff to the US, and not only that, I mean. US export restrictions have also been put. They were always there. They've been tightened further on chips and semiconductors and so on and so forth. So I think the whole frustration of the US is the Chinese indispensability. Let's all agree China has been able to create that indispensability, which the kind of economic cloud China has today, and let's theoretically assume that the US does impose 100% duty. Let me tell you, both countries would suffer and will face the music. It's not just China will face the music. US will face a terrible onslaught of inflation, right? Of consumer products, of a lot of industrial products, military products, and so on and so forth. I think this has to be seen in that context. But unfortunate thing is, the world today behaves in a language of threat rather than sitting on the negotiation table and discussing it out. I mean, I don't even know whether the meeting between Trump and the Chinese president, which was expected, I think, in South Korea later this month, whether it will happen now at all. So I think it's a dangerous situation. The two most powerful economies and comparable economy. I mean, U.S. economy now in nominal terms is only slightly bigger than Chinese, right? And let's also face, if you look at the purchasing power parity, then Chinese economy has already overtaken that of the US, right? So it's a clash of the titans. Let's see which way it settles.
The clash of the titans, you say. And G. Chokkalingam, before I come to you very quickly, Mitali, what does this then mean for consumers, for inflationary pressures going forward, and for India as well, in the midst of this dynamic between US and China?
Yeah, absolutely, Sakshi. I mean, if we think about it, India has sort of taken a very balanced stance, but the US may not see it that way. The US is seeing India's recent interactions and attending the Shanghai Cooperation, forum as sort of overtures to China and trying to sort of side closer to China. So in this situation, if India faced an additional 25% tariff for purchasing Russian oil, then what happens if the US says, no, I think that you're becoming too close to China, you're importing too much from China, and here's an additional, tariff because of that. I mean, so at the end of the day, I know it seems like a very far-fetched reasoning, but the problem is that we are dealing with a very uncertain administration. So in such a situation, if, for example, we don't see any additional tariffs, or if we don't see any additional action on us, and yeah, rather, it brings the US back on the table to have negotiations with India, then that's a favorable outcome for India, and it helps the Indian government negotiate to reduce the tariffs further. So that can actually be good for India. On the other hand, it could even go the other way, in which case again we'll start to see an impact on Indian inflation and an impact on Indian value chains. So either way, the writing on the wall for India is very clear that we have to continue with our investments in our growth story. We have to continue with our trade diversification efforts. We have to continue with dialogue with really every forum and every groupings of countries to keep our trade going.
Absolutely, G. Chokkalingam, do you agree? And as far as the world of equities and commodities is concerned, really, we have seen Asian markets, trade witness muted trade today in today's session. Across the board, really hit by this US-China trade tension, flare up once again. We have seen gold prices continuously inch higher and oil prices ease. So, your thoughts on really why and how this will impact the world of equities and commodities going forward?
Certainly, it will impact global equities and the global economy because in China and America put together control almost half of global GDP, and both economies, as our colleague has explained, both economies will be impacted by this aggressive tariff. But however, I am putting it on record that Indian market is likely to outperform in the short term. First of all, I think Mr. Trump will think many times before making any more aggressive move against India, like how he has done for China, because that would weaken politically US. Because that would lead to strengthening of the alliance between China, Russia, and India. So I don't think America would like it. And secondly, as all of us know, our goods exports are not heavily dependent on the global markets like China. Third, oil price has already crashed 24%, which is a big positive. That's what rescued Indian equity market in all the global crises. And one more fact is that recently the foreigners have taken money to China, Chinese equity market. Now that may take some small hit, and possibly the money can come back to India. And otherwise, our growth story remains strong. And monsoon has concluded with a great success. Water storage is too good. Inflation is very low. So all this would augur well for the Indian economy and markets. I can go wrong only for Trump moves, make one more move like he has done for China, but I doubt whether he can afford to do that. So therefore, I believe in the short term itself, Indian equity market will outperform the global markets.
Right, as long as US President Donald Trump doesn't spring another shock or surprise, what you all are saying holds for India's economy and the global economy as well as global markets. Thank you so much for sharing your thoughts and for joining us. Thank you.
Thank you.
Pleasure.